Sure, yeah. So I'm Jayaram Udayakumar. I'm in US for last 20 years. So I have my own financial services company helping my clients and families with whatever they need, starting from financial planning. I do the 401k IRAs for W2 employees and SIP IRA and SORO 401k for entrepreneurs and the business owner clients. And then pretty much I do the retirement income planning, kids college planning, and pretty much I have all the insurance agencies. I work with term insurance providers, health insurance providers as well. I'm a notary public here in Commonwealth of Virginia and a real estate investor as well for last couple of decades. I help my clients with LLC planning. I work with multiple attorneys, tax attorneys, and real estate attorneys as well. And I do the franchisee business consulting as a part of my financial services business portfolio. So I'm basically kind of a typical one shop stop for pretty much whoever need whatever planning and solutions and consultations as well. So I live in Northern Virginia for last 20 years.
Oh, that's great. That's great. So today we want to focus on the term insurance part. As we all know, the term insurance is very important for every individual. So I want to start with the very basic question that we all know term insurance is very important. Once we realize the importance, how one should start? I mean, what is the process basically?
Sure, yeah. So of course, as soon as people come here to US in H1B or L1 visa, so they basically get a basic employer provided the group life insurance. So the employer provided group life insurance is absolutely like free of cost for the employees. I think the employer these days give like a 1x or 2x, like 100,000, 200,000 as a basic one, a free one coming out of the employer group life. So I do the employer group life as well. So employer group life is great because it's a free for the employees. But the other side of the employer group life is as soon as if the employee leaves the employer, no matter whether employer let go or employee leave the employer, that group life is going to end for that employee. So absolutely like employer provided life insurance is only like a bonus for the employees, and apparently that's not the employees owned insurance, right? And that also don't have the illness riders or living benefits. As long as the employee works, they have like a 1x or 2x coverage from an employer. So rather than getting an extended coverage from the employer, paying like 50 bucks, 100 bucks for $1 million coverage, even after that's knowing that that's not going to be my insurance apparently if I depart that employer. So rather than having an extended coverage with extra fee from the employer's one, everybody need to have their own term insurance, right? So we have car, we drive the car, we are having car insurance. We have home, the home mortgage mandates us to have a home insurance, right? Like that, people forward in this country having a kid or a home mortgage, everybody needs to have a term insurance. And apparently, like I'm in the business of educating my Indian American communities more in the context of not just how to be retiring with $2 to $3 million or achieving their fire number, but also make sure they have proper the family protection in place in case of any of the financial turbulence happen to the family, in case of a primary breadwinner is not alive or primary breadwinner is basically having some illness related issues. We see like two type of GoFundMe's on these two scenarios, right? So it's sad to see a lot of GoFundMe's among our own educated Indian American communities. So that's what like the term insurance comes up handy for the families where they can able to use that term insurance coverage as a part of the financial planning. So I would say the term insurance that have like riders for critical, chronic, and terminal illness, and then along with the will and trust is going to be the top two priority for everybody's financial planning here. So even before they think about investment, they need to purchase the term insurance. And we will cover more about the term insurance in this session.
Right. So, as I discussed with you, that we realize the importance of the term insurance. Now, how one person, any person, should start? Like, what is the process and the checklist I have to follow?
Sure, that's a great question. So pretty much as soon as they land in US, not many people can able to get the term insurance. So term insurance is for those who are living in this country for eight months plus, right? So before 8 months plus, we cannot apply anybody's term insurance. But as soon as the resident turn into 8 months into this country, we have few providers who give for 8 plus months, and we have few providers where they accept the application for the immigrant for 1 year plus, and there are few the providers who accept the application for 2 plus years and 3.5 years and stuff like that. So apparently, like as soon as you come to this country, make sure you have the proper protection from the employer, start your 401k and work with your financial planners to basically figure out your term insurance requirement. So that's basically the topmost priority in the financial planning. So term insurance is apparently unlike the home insurance or car insurance and health insurance. This insurance apparently it basically depends on multiple parameters, right? So every time basically I submit a policy for a client, the client need to prove their insurability, right? So younger the client is, more healthier the client is, that's a right time and no brainer to get a term insurance and lock the premium, right? So we have multiple Indian American communities who are into this business as well, and we see like lot of momentum in multiple social media platforms. So as a community, we are educating and make sure like everybody gets educated on the importance of the term insurance. So
If I want to buy insurance, how do I know that what is my insurance need or what is my worth basically I should cover?
okay. So in a nutshell, we recommend everybody to have at least 10 times the annual income. So let's say if I make $100,000, like 1 million for 30 or 35 years or 20 or 30 years based on the age of the client, right? So let's say if the person is not available, what is the money that the family, depending on that primary breadwinner needs, right? So we say 10 times of an annual income, or we say like a $1 million, or we have another parameter called dime analysis. So the dime analysis calculates for debt, D for debt, including credit card loan, auto loan, student loan, I for income replacement for next 5, 10, 15 years for the family's maintenance, M for mortgage leftover, how much mortgage is left over, 500,000, 250,000 or a million, E for education, how many kids are there, how old are they, one kid, the college education is going to be like $250,000 for 4 years, and two kids means easy $500,000. So if you consider all the sum of all the DIME, that's going to be like near to like $1 to $2 million for pretty much everybody here having a one or two kids and having like an average of a 500,000 home mortgage. So
Okay. So in a nutshell, you are saying that the income replacement plus the mortgage and probably the kids' education. These are the three criteria to calculate your net worth or
that's
the
right. We call like a dime analysis, right? So let me share my screen here so you can just take a snapshot of this, right? So this is the primary requirements here.
yeah.
DIME, right? So that's the one. So
Right. So debt, income, mortgage, education,
right.
you have done.
So this is for the family's income replacement, right? And then we do have like most of the term insurance companies that we work with, they also make sure that as a client, if I need money for, say, for example, critical or chronic or terminal illness expenses, the cost of a private nursing home is about like $250,000 per year. If I need assisted living facility, that's going to be like $150,000 per year, right? So a family making $200,000 per year, they need to work, pay taxes, pay bills, and save $200,000 probably in 5 to 7 years, right? So an unprepared family having a family member having this illness related expenses, the family potentially don't have any choice but to erode the lifetime savings, right? So unfortunately, in this country, the leading reason of the individual bankruptcy is raising healthcare cost, and
Right.
majority of the GoFundMe's that we see among our own Indian American brothers and sisters family, if a primary breadwinner or the spouse need money for the illness expense, potentially that wiping out the lifetime income savings, right? So rather than having a medical, the bankruptcy, whatever the term insurance that basically covers for the client's life, that basically helps the client itself when the client is living. That's called like a living benefits. So the term insurance companies that we work with, I basically work with about like 50 companies. So we basically make sure to have the term insurance, the providers based on the client's immigration status, how many months they are in this country, what is the current prescription medication they are taking, what prescription medication they had in the past, because all of them are going to determine to be in a factor to determine which provider goes to whom, right? So as a professional in this industry for over a decade, so I basically work with multiple providers and associate a lot of client with different providers based on what is basically best and suitable for my clients. I go with multiple providers. So it's not like I do all policies with one provider, right? So that's not been the case here apparently. So
Okay. Um, yeah. Tell me one thing that suppose I completed my the suppose I come to know my worth, how much insurance I need. After that, is there any criteria that insurance company will give till this age only? For example, 75, 85, or 65. Is there any criteria for that?
So apparently, term is a short form of temporary, like how I am renting in an apartment, right? So that's a temporary agreement between myself and my landlord saying that I can live on yearly basis. So that's called term. Not many people know that definition of the term is a short form of temporary insurance. So you are renting out that $1 million coverage for 30, 35, 20, 25 based on your age. Basically we can determine in that need analysis to figure out what term years you need and what face value you need. Pretty much all of them that the advisor and the solution provider agents are going to take care of that, right? So based on whatever is need, we can basically go with what is the best interest for the client, what is the suitability for the client. And of course, like suitability may be different and affordability may be different, right? So we need to consider how much the client family can be affordable.
But do companies give a term insurance beyond 65, like 75 or 80 or 80?
Yes, of course. So apparently, a 45-year-old. I majorly work with like multiple companies, of which Corebridge is one of my the favorite company. So the reason because the Corebridge is the only provider in this country which is a Fortune 500 plus year old company to give the longest term, which is 35. So a client's less than 45-year-old, they can get 35 term apparently. So which means that they can cover until 80. So even though the traditional way of taking a look at the life insurance is only as an income replacement strategy, lot of providers these days offer the living benefits, the riders, right? Chances of getting ill probably at late 60s is highly likely than late 50s, and same like early 70s or mid 70s. So many of my clients, when they're affordable, they take up to 35 years, whoever less than 45 year as of now. And people less than 50 years, they can go with like 30-year term. And people more than 50 years into 55-year category, they basically end up getting 25-year term. So apparently the term insurance, what we do is not just like an income replacement strategy, but also the wealth protection strategy for the family in case of an illness. Potentially into the retirement also, they can basically get their own 500,000 or 1 million, whatever the face value will be to themselves apparently. So that whatever investment and savings that they did, they don't need to touch it. So that rider, they take the entire death benefit for their critical or chronic or terminal illness. So that way that basically covers like an investment, the protection before the retirement and also in the retirement apparently. So
So you are saying instead of term insurance, which will cover probably 70 or 75, go for whole life insurance so that your terminal illnesses will also get covered till the age of 100, right?
So that's a great question. So of course, like whole life and IULs are for a completely different use case. So
Okay.
that is for the estate planning and the estate tax planning, the strategies. But yeah, apparently, like the higher income group community that we are seeing is when they have more affordability, they basically take $1 million term, and also we do the max funded IULs for the clients. So where the death benefit is going to be super low for their cash value to be accumulating. So that way, when they start at like mid 30s or mid 40s, they basically end up contributing for like 10, 15 years, 20 years, and they basically take the cash value compounded apparently. So whole life and IULs are certainly not for everybody.
Okay.
Unlike term insurance for everybody, whole life and IUL need proper more determination of how well that they are diversifying currently, right? So they need to max out their 401k. That's going to be the topmost priority for the family. And they figure out a way to put some money in the IRAs as well. And having like a HSA investments up to $8,000 max as of this 2024 is also going to be more important. And having a primary home and also both the husband and wife working. So those are some of the prospects that I basically do when I do the need analysis for the family to determine whether this client need a whole life or IUL. Because IUL these days, like pretty much the newer agents, they started to provide to everybody, but apparently like that's probably their perspective. But as a professional in this industry for a decade, it is basically a risk diversification strategy and also tax diversification strategy for the higher income group community. So
Okay. So you are saying one should stick to the term insurance only.
yeah, everybody needs a term insurance, but whole life and IUL is for those who already kind of doing other sorts of investments and still having like $500, $1,000 more in their cash value, right? So
Once I realize the my worth, how much insurance I need, how can I select the best insurance for me? I mean, what are the parameters should I check?
yeah, great question. So everybody needs to know that so life insurance is a product where they cannot just shop around in an online platform. So this is not a laptop or cell phone or camera to shop around themselves to basically buy anything on their own, right? So that's kind of, I would say, like kind of a self-medication sometime without knowing what they are doing, they end up getting it apparently. So even a single typo in their online application that they are trying to do without an agent, that basically going to backfire them. So the claims are going to be like kind of the company may even like kind of a contest any of the claim that happens if any of the inaccuracies happens with or without the knowledge of the clients, right? So that's what it's always better to go with a licensed provider in your state, so that way with an agent and professional doing this as sort of the offerings, they help like multiple clients on an everyday basis, right? So that way they basically bring the wealth of experience into the table for the clients to understand, compare the products and stuff like that. So please don't just go into like kind of a policy genius kind of policies without even reading terms and condition, because a lot of policies where it just get approved like just like that within a day or within couple of hours, not many people know that those policies can be contestable until 2 years. So what that means is if any of the inaccuracies happens between the application that the client is filling versus the underwriting, the your doctor's report they are having behind the scene. They may give the policy right away, but they will come back in the first 2 years to point out the inaccuracies and even void the policy if any of the inaccuracies happens, right? And also if any of the claims happen in the first 2 years, that will be contestable as well. So you need to, I always recommend to go with an advisor or provider who is in this industry for multiple years. So this is the one of the most important risk mitigation strategy where you are purchasing, where your family should not get harassed by the life insurance company on your absence. So always have like the industry professionals into this one, so that they basically walk over the steps to figure out what is the best one for you, because not all the online policies have the riders. So I basically work with multiple providers directly. So I have a direct contracts with all the providers where those providers and products that I basically contracted with, apparently they all have the riders. even for a simple term insurance, they have a living benefits riders apparently.
You are right. But I want to ask you this question that, while selecting insurance, what are the parameters one should check? Like if I have three, four companies in front of me, then which is the best company for me? So on what parameters should I check?
So that is more of a, you need to leave the decision to the professional rather than doing ourselves, because there are a lot of multiple parameters are there. So I'm also educating a lot of new generation clients that they are coming in recently apparently. So here is a nutshell, because not all the providers are made for everybody. So some of the providers, I don't want to name them, some of the providers don't even take like a visa application at all, right? So if you
Okay.
are in H-1B visa, if you don't have like approval notice, you cannot go with certain providers. If you don't have a social security provider, you cannot go with certain providers, right? So some
Okay.
of the providers are like kind of a little different, but majority of the providers where we work with. So as a professional, we make sure whether the policy have a rider, whether that's a globally covered policies or not. So even if I decide to go back to India after a few years, in case if I want to go back in the retirement or midway, I need to make sure I need to carry the coverage to India also, right? So we work with all the global providers like Corebridge, where basically the policy, so long as the policy is active and in force, the coverage is going to be there no matter where I settle down. So please rely on that with your professional, where they will basically help you to make a determination apparently. And
Okay. Okay. You're saying whatever your professional is saying, this is the best insurance for you, you should go with the one.
that's right. And also in terms of the approval rating, some of the providers are little bit harsh for diabetes. Some of the providers are little bit harsh if there is a cholesterol with diabetes or BP with cholesterol or any of the combination, right? Some of the providers will deny your policy if the A1C diabetes rating is more than 7. But some of the provider will give you approval probably in the substandard rating. So with the wealth of education that we are working with multiple clients and talking with underwriters for multiple policies every single day. So as a profession, like I basically come back with like lot of permutations and combination. I documented like lot of notes based on my decade of the industry experience working with multiple providers and multiple underwriters. So I exactly know as soon as I meet with a client what provider that they will be qualified for, what provider is best for them, so that when I apply that one, that will be like kind of a easy one for them, right? Because not all the providers underwriting is going to be the same. Some provider underwriting is going to be harsh for tobacco consumers. Some provider we won't be even considering like a non-tobacco category for a smokers who even quit smoking like 5 years back, right? So
Mm.
I do have a lot of non-medical underwriting for some of the current tobacco or previous tobacco consumers, where they will basically get some approval when some of the other providers tobacco rating is going to be crazily higher premium, right? So I do the non-medical underwriting policies as well. I basically associate multiple providers based on the client's immigration status and current health parameters and past health parameters, all taken into consideration. So
Okay. But Jairam, see, there are a lot of professionals, insurance professional working in the industry. Right? There are good people, there are bad people. But the professional is suggesting me a best policy for me. How do I check that? I mean, there are some interest like where the policy is best for the insurance professional, but not for the individual. So how do I check that? Yes, this is the best policy for me, and yeah, I mean, I got the good deal. So what kind of checklist should I go through?
So I see a lot of our Indian American posts in multiple social media platform, where some of the recently formed like IMOs or MLMs try to push like an IUL's big way, right? Just because the agent got an IUL, that agent should not provide the IUL to all the clients, right? Everybody should start with the term insurance, because the goal of the life insurance is basically the income replacement strategy. So the agent itself need a kind of an education to figure out what product needs to be going to whom. So I'm reviewing a lot of my clients not so good, badly designed IULs, where those IULs are crazily designed by like a newbie agents, and just because a friend, some of the clients end up taking their IULs from their friend, believing them apparently. So only after a year or two, that IUL started to show the true color. By that time, the client would have lost lot of money, right? So please go with the professionals who are working in the industry for like many years, to even shop around for that. Otherwise, if you want to buy a insurance from your friend, just stick with the term. So term insurance is everybody's need. That's a period. There's no other choice. Do not deny getting a term insurance from anybody. As soon as somebody provides you a term insurance quote, try to sign up the policy right away if you don't have a term. Let me explain you why, right? So every year I delay taking a term insurance. My
Wow.
next year premium is going to be about $10 per month higher than today.
Oh,
And let's say next year when I try to delay, if I accumulate some higher BMI or BP or cholesterol, my premium will be 2 times higher. If I get some borderline sugar or A1C, my premium will be 3 times higher, right? So basically, term insurance is a one where you should never delay. So as soon as somebody gets you a term insurance quote, get all the queries clarified in the within a week.
okay. So Jairam, once a person come to know that how much insurance I need, so how one should finalize that this is the best insurance? Uh, what are the parameters to select the best insurance?
So that's a great question. So please rely on the professional who is helping you to determine what's the best for them, right? Otherwise, like, so let's take example of multiple providers. So I don't want to name each one of them. So wherever that you are purchasing, say for example, Costco Protective, or let's say you are buying from some of the captive companies, right? So I don't want to name the companies, but there are a lot of captive companies where those companies, the employees and agents are there. Please ask every single company saying that is it offering the illness riders and living benefits for critical, chronic, and terminal, because some of the captive companies, and also some of the shop based the providers, they are the great companies. They are there like 100+ year old as well, absolutely. But that's only helping a death benefit. So that basically provides to my family once I am gone. But if
Okay,
I need a $250,000 for a critical illness, or
right.
$250,000 for a chronic illness yearly, right? Those provider won't provide for that because they don't have the rider. So I would pick a provider where it has a simple term, and even in the term they have all the three illness riders like critical, chronic, and terminal. That's why a lot of my Indian American clients love Corebridge, because that's a global company. Even if they decide to settle back to India, they can basically carry the coverage. It's a global company, and they also have critical, chronicle, terminal illness riders right off the bat, even in a simple, inexpensive term. And premium is going to be much lower than the other providers. So I basically have a CRM platform where every quarter I basically compare, for my own age, apparently, which is giving the good premium, right? So I basically do that analysis in the back end, so that I don't want to overwhelm the client with 10 options where the client will get more confused, right? So please leave it to your professional. And also, when a professional is showing you a term insurance, please don't delay. Within 1 week, ask as many questions you want. Please have your family involved in this decision making process as well, because that's going to help for your family, not for you, right? So if I am gone, my family needs to know, apparently, right? So I am not a decision maker to decide whether I need a term insurance or not. So let's say if I see my family photograph, let's say if I cover myself, and if my family is only there, what are the thought process that's going through of three of them, a single
Right.
mom raising two kids? So the term insurance is not something that it's taking for myself, it is for my family. And the clients need to understand, as soon as a professional show a term insurance, please don't delay. Every year you delay, your premium is increasing by $10 per month, even at the same health category. Let's say you miss the golden days in the good health, and if you end up with a BP, cholesterol, or higher BMI, your premium will be 2 times higher. If you have a diabetes, it's 3 times or 4 times higher. Unnecessarily, the delay is going to have more premiums in the future. And unlike your home insurance and car insurance, which increases every year, the term insurance of only one insurance in this country where it remains the same, right? Younger you are, more healthier you are. That's a right time and no brainer to lock the premium in the term insurance where you cannot
So
lock in any
before
other insurance.
you want to say before anything start medically starts, for example, any diabetic or any other BP or something, you should before that you should buy the term insurance.
Of course, as soon as you see somewhere in a social media platform about term insurance, call the professional and ask about it, right? Learn about it and watch multiple of the term insurance videos and make sure the agent is providing with the riders. So
So even before starting a family, before getting married, once you start working, I believe one should start the insurance.
yeah,
That,
that is a good thing because his premium is going to be locked for 35 years at the younger age, right? And
right.
apparently, after they have a family and after they have a more investment, they will always increase 1 million to 2 million or 3 million. So that exactly happened to me, apparently. So I got my first insurance about like 18 years before my current 17-year-old daughter was like a 1 year old. I got that one. So and then I increased the coverage as I bought my home and investments and stuff like that. So
Okay, great. I want to come to know this, right? As a family, husband, wife are both are working, right? So they buy, both of them buy term insurance. Is there any plan where combined cover is there? Husband, wife are buying together, or
So that will be far more expensive. Let me explain you why. So a husband and wife with the same age, the wife premium is going to be 20 percentage lower.
okay,
That's because the mortality table favors the spouse with a lower risk. So with the same age group, the spouse is going to get like 20-25 percentage right off the bat. And majority of our Indian American communities, spouse may be little younger than the husband's. So
right.
husband's premium is always lower to the spouse. So take a simple term for both of you, a million each, so that you don't need to worry about the other sort of insurance, which is like a first to die, second to die. There are multiple complicated insurance products apparently. So we don't work with those insurance product. That's kind of so much confusing apparently. Simple term for both of them. So as soon as something happened to that person with a social security number, the payment comes to the beneficiary. So that's going to be the far least expensive. The term insurance is going to be for the individual.
Okay. And suppose, I have taken the insurance policy and I found that, there is any misinformation provided, probably by at the time of filling the application form, I wrongly entered the information. So is there any chance there where I can rectify that, or is there any modification I can do once even the policy is issued?
So that's a great question. So that's exactly why I'm not a big fan of the online portal where the person can do without an agent or without somebody helping them to fill an application to understand about the product. So always go for the medical underwriting. What that means is the provider need to check my health condition as of that day and go over my urine test and blood test and figure out every single parameter needs to be visible to the provider rather than relying on my misinformation or information that could be wrongly entered by me deliberately or unknowingly in a platform when they compare with actual medical data, right? So always pick a provider, and it's good to have a medical the blood work in place. So always like not having a medical blood work is maybe thinking great, but apparently having a medical blood work is going to ensure that as soon as the policy gets approved and started in force, then the provider won't come back to the family to have lot of contestability issues and all won't be there. So that's where like medical the blood work is going to be kind of a mandatory for many provider for the newer immigrants standpoint. So I feel like I'm more comfortable as a client to have a medical and blood work done for my policy after for the approval rather than purchasing in couple of hours. This is not like a laptop to buy in a couple of hours, right? So
Great. And is there any protection law, like, in India, there is a section 45 where even if I enter, even if I mention the wrong information, uh, not intentionally, but if the claim comes after 3 years, the claim still gets settled. I mean, I believe there is insurance utmost faith is the
right.
principle of insurance. Whether such kind of section applicable here as well?
So as soon as the policy gets approved and issued, after the medical blood work and things like that, so long as the policy is active and all the premiums is paid, apparently no claim will deny, apparently, right? The first 2 years alone, the self-induced death or suicide is not going to be covered by any provider. That's the only clause. The first 2 years, self-induced or suicide is not covered. Apparently, every single death over the period of years starting from the day one of the policy in force until the term year end. So that's basically there. And a lot of term insurance clients, as soon as they realize like they may need an extended coverage, talk with your professionals. So I basically help my clients to upgrade their term to whole lives or IULs later also, right? So everybody start with a rented home, that is a term. And when you need requirement for your own home, which is a permanent cash value life insurance, that's called like IULs and whole life. So
Okay, okay. So, and how about this? For example, if any company go bankrupt, what will happen to the insurance policy? Or there are a lot of merger and acquisition happens in the United States.
right. So
If
that's a great question. So let me talk about the chapter 11 and chapter 12 bankruptcy, right? So take an example of like a Toys R Us gone bankrupt because of lack of sale and other stuff, right? So life insurance company is there, or at least the companies where we work with 30 to 50 carriers in US, and about the similar one in Canada as well. So those companies exist for 100 plus years. In 100 plus years, they would have withstood two world wars, Great Depression, and every decade of market recession, but still their cash value is exponentially going in billions. And every year they add like hundred thousands of the new clients and stuff like that, right? So if you take a look at the bankruptcy scenario, so not many people know that everybody talks in US about FDIC, right? So FDIC all says my 250K is safe, up to 250K is safe. But Anand, tell me a question answer for this. So how much you think FDIC have in their cash reserve that everybody, that American, we all say like my up to 250K is covered?
yeah, that's the insurance cover, right?
Yeah, so how much you think FDIC will have in their cash so that all the millions of Americans say, I have 250K coverage from FDIC?
Yeah, it's difficult to guess. I mean, I have no idea.
So let me tell you that that is like one fifth of $1 trillion.
Oh,
But how many $1 trillion banks that we have? Bank of America, JP Morgan, Chase, Wells Fargo. Aren't they uprightly lying to everybody that if everybody's 250K is covered, right? That's not really lying. They are assuming that not everybody will have
uh,
250K coverage. So only the financial company and banks and the brokerage institution may potentially go bankrupt,
right.
right? The life insurance company where we work with, they withstood two world wars and Great Depression and every decade of market recession, but they still keeps going because they cannot touch the money to do some investing or trading to burn their fingers, right?
Right.
So the only possible scenario where we can think about a possible bankruptcy of like 150 or 200 or 100-year-old company, kind of a collapse. So let's say an asteroid strike the US and 100,000 people are dying at the same day, and 100,000 beneficiaries need to be alive to pull that $1 billion cash out of the companies, right? By that time, all the Bank of America, JP Morgan, Chase would have gone out of thin air. We are talking about the end of the world scenario.
I,
Even at that end of the world scenario, your state government insurance agency is going to give $300,000 to the survivor.
Okay.
Even after that end of the world scenario, the state government insurance bureau reserves $300,000. That's a max, apparently.
Okay.
So for whoever having the claim. So even if the life insurance company gone bankrupt for whatever reason, your state will give up to $300,000. So
Let's come to the claim process. In case of any claim, what is the process needs to follow? Like, the nominee or the family member, what is the process needs to follow?
So while you're filling the life insurance application, so a husband will be a husband's policy, wife will be the beneficiary, and then wife's policy, husband will be the beneficiary. And for now, we provide like the both the kids as a contingent beneficiary in both of their policies. So as soon as they complete their will and trust, they need to swap their contingent beneficiaries from their minor kids to the trust, right? So your trust should be the contingent beneficiary in case both husband wife are not there. The trust
Okay.
should receive the money, and your estate planning or the will and trust profession will help you to figure out who should be in the trust, or you can say like your extended family members back in India or here needs to be in a trust, right? So that way the trust is going to get the money and then distribute to the kids based on when they are ready to take the money, right? So coming back to the question, every time there is a life-changing event happened, it is your utmost responsibility to change your beneficiary, right? So that way you will always be in place. Like you need to change your beneficiary if you have a new kid born, and as soon as you complete the trust, remove both your minor kids from your contingent beneficiary and add a trust, right? So that way the trust will hold the millions of dollars rather than going to the kids who are like a 18-year-old is a quote unquote adult in this country. So that way, so claim process, every company have their online claim process. You can simply Google like AIG Core Bridge claim or Transamerica claim or Northwest or a National Life Group claim and things like that. So as soon as you get a claim process, if you can able to reach out to your agent, that's fine. Or if the family needs to maintain some anonymous stuff and claim. So because not all the clients are going to use the agents for the claim process for whatever their known reason, because the companies where we are associating, they are massive companies and we agents are nothing with respect to the massive companies, right? As soon as the agent associate with the company, you can directly work with the companies as well for the claim. Or if your agent is reachable, you can always go with the agent. So we have a similar process as well. So we basically create a claim through the online and they provide like a claim ticket. And apparently based on that, they will ask to upload some of the documentation. So if the death benefit claim is coming up, they need a simple like a death certificate issued in English and with a letter pad. Like so and so doctor or hospital certified the death and stuff like that. If it is a illness expenses or the living benefits claim, the doctor certificate is needed. So critical illness means all these scenarios that your professional would have explained. If the doctor says any of the heart attack or coronary artery bypass or stroke or invasive cancer or blood cancer, organ failures, paralysis, coma, severe burn. So these are some of the ones for the critical illness one. And chronic illness means, let's say if a doctor says, I cannot even perform two of my major activities of daily life. That's a chronic illness. And terminal illness means, let's say if a doctor says, I'm going to live only for 2 years. That's the end state, terminal illness. So get that letter from the doctor, and those will be the claim documentation for your living benefits claims.
Don't stop here. I mean, can you explain all these benefits? I mean, three illnesses like terminal illness, critical illness, and living benefit. Can you please?
Sure, yeah. So in the term insurance, what we call like a riders, what that mean is who needs money, take money. So if I am gone, the complete $1 million goes to my kids and beneficiaries as a tax-free death benefit. Let's say, how can I take my own $1 million? So that is the riders coming into the picture, right? So three type of illness, what we call like a C, C, and T, right? Not many provider will have all the C, C, and T. Many provider that I previously mentioned, some of the captive companies provide only the T, which is for terminal. So terminal illness means, let's say if a doctor says the patient is going to live only for 2 years, that is called terminal. That basically he's in an end state, right? That's a terminal illness. So the critical illness means, let's say if the patient is having like a heart attack or coronary artery bypass or stroke or invasive cancer or blood cancer or major organ transplant, paralysis, coma, severe burn, all of them classifies as like a critical. If doctors give that this patient is having so and so description, that's going to be the chronic illness, the claim documentation. Sorry, the critical illness claim documentation. Chronic illness means what we call like a ADL, activity of daily life. So
Okay.
if the patient cannot even perform two of the day-to-day activities, right? Bathing, dressing, toileting,
Okay.
cooking, eating, all these basic activities, if the client cannot perform even two out of it, that's called chronicle. So that's what we call critical, chronicle, and terminal. So make sure your term should get all these riders.
Okay.
So if there is no riders in your existing policy, so come back to me or any of the provider. We know ways how to upgrade your policy that you already taken with a great company without the riders to another great company. Just like how you are upgrading your phone, how you are upgrading your car, how you are upgrading your homes, you can always upgrade your life insurance, term insurance, so long as you are insurable. So we will submit a new
Can
policy.
you can port your policy as well,
Come
or no?
again?
Can you port your policy like you port
Yeah,
your
so the porting the policy is only a logical. So let's say how I am sunsetting my phone and buying a new phone, right? I'm not going to throw away my old phone until I set my new phone in place and transfer the contacts and stuff like that. So portable policy means we still need to go over a new policy application as a new client, and the provider determine whether they need a blood work or not. So not having a policy before is not going to be any advantage for a new policy, and that new policy is going to be determined on how healthy that I am, how healthy that I was, and my current age only is going to be the premium. But as soon as client get to know all these riders and stuff like that, that I can take myself when I am living. So that's kind of a easy and no-brainer decision that they basically apply with lot of providers like Codebridge, where they give like a riders for all the CCT right from the day one, right? And then they try out in the core bridge, make sure their policy is getting approved in a good rating, and let's say if the premium is affordable, then as soon as they start their premium in the new provider, they can basically determine whether they want to discontinue the old provider or not.
like suppose I have taken the policy, it's a plain term insurance, and 2 years, 3 years down the line, I come to know about this critical illness riders. So can I add in my existing policy these riders?
No, unfortunately, not all the providers still, those captive providers are not having the riders even for their new policies. So there is, even if somebody pays extra, those providers don't have any CNC itself. They have only a death benefit policy. So any of the riders, any of the missing riders cannot be added back once the policy is active. But as soon as they realize that some of the riders are missing in their existing policy, they can always try and figure out whether the new policy works out for them. So apparently there is no cost in trying the new policy to figure out their approval rating and their premium and stuff like that. If they are satisfied, they can pay the premium and discontinue the older policy. So that's what we logically called as portable, but it's a new policy application, the new provider with the riders on it. Make sure the premium is going to be still affordable, right? Because I would have got my old policy when I am healthy, but now I would have got a diabetes or something. My premium will be three times higher. People may be thinking, should I really need this or continue the one which I got it, right? That's what that person would have made a best choice. At least they have a death benefit right in place when he get earlier, right? So that's what everybody needs to take the policy sooner than later. So
Yeah, right. And let's come to the claim part. So, normally, how much time it takes to claim settlement? What is the duration? Once
So
the
just like the policy application have an underwriting for the approval, the claim also have an underwriting for the approval, where the claim documentation is needed, either the death benefit from the hospital or doctor, or illness related description and reports from the doctors or hospital, right? So most of the instance, the death benefit gets approved right away within a week or 2 weeks if the documentation is clear, and the check or the deposit comes to the beneficiary's bank or the home address, the check. Coming to the living benefits part of it, so the living benefits part of it, the doctor need to provide like a detailed description of what is the client currently exhibiting.
Okay.
Right, in the all the illness, the C and C, they have like three levels of illness: high, severe, moderate, and low. So the doctor need to clearly say that because of this letter, they need to say that is it really impacting the mortality, right? If it is not really impacting the mortality, then that's not considered as a living benefits claim. But if
Okay.
it is impacting the mortality, right, heart attack or in cancer or something like that, the average mortality table for a men is like 80, 81, and women is like 83, 84, right, on an average in the America. So I'm not talking about our community. I'm talking about in general with an American, the DNA, right? So if the doctor determined that because of this impact, the mortality is for this person is definitely not going to be an average but lower, that's a right justification for the claim that basically happens. And the underwriter in the claim process in the company works directly with the doctor in case of any of the queries, and also with the claim beneficiaries and the person forward making the claim to basically figure out any of the queries or clarifications. So in other words, death benefit is simple within 1 week or 2 weeks at the max, and living benefits is based on the claim process and discussion with the doctor to for the doctor to demonstrate that this is really coming down. If it is like a terminal illness, simply there is no more question. Terminal illness is considered as a near death scenario because the doctor is going to say this person is going to live only for 1 or 2 years, right? But if it is like a critical illness, how critical it is it like high critical, medium critical, or low critical? Chronic illness also high chronicle, medium chronicle, and low chronicle, right? So the doctor need to demonstrate or kind of give some additional supporting documentation on the request of the underwriting department. So the company's underwriters, with or without the agent, they directly work with the doctors to determine those critical level for the claim. So
And what are the circumstances where company can reject the claim?
So lot of the clients, what they do is, so majority of the clients, I would say 99% of the clients are super disciplined in doing an auto payment. If it is an auto payment, it basically pays like how we pay for our home mortgage, car insurance, home insurance, right? Every single insurance need to be auto paid from your bank account. So a lot of policies holders where they want to pay every time on their own demand, like first day, fifth day. So many people turn off their autoplay and say like, okay, I keep a reminder in my calendar between 1 and 10 day. I basically pay for myself, right? If they end up not paying on due date, the policy gets lapsed.
Okay.
So when the policy gets lapsed, both your agent and also the life insurance company is going to contact the client, inquiring about the whereabouts and how healthy they are, why they lapse the premium, because anything could have happened for the client, right? So we always make a courtesy call to both beneficiary and the spouse to make sure everything is good, whether they have a job and any of the life-changing event happened because of which the policy gets lapsed. So many people realize the policy got lapsed only after I call them or message them, right? So the only way where the company can reject the claim is if the policy is lapsed and no premium is paid, but a claim is made.
Okay.
In other words, I cannot make a car insurance claim when I expire my policy with Geico, right? I need to keep my policy active, paying the premium to have the claims done. So
But there are cases where you miss one payment and you pay very next day or within a week. So is there any grace period provided by insurance company?
So 1 month is a time where they basically provide the grace period to have the premium paid from a lapse to back to active. But if lapsed is going to be lapsed for like more than the 60 days or something, apparently the policy will remain as lapsed unless the client directly goes to the company or through the agent. We have a reinstantiate form, reactivation form. So reactivation form needs to be filled with pen and paper and get a signature, and then reactivate it within like an additional 30 days. So if for whatever reason the client missed out the premium, when we are reinstating it, if they agree to basically pay all the premium from the time where they lapsed today until today, the policy will be reactivated. So
So within 30 days, one needs to pay the premium.
correct. Yeah. That's exactly why everybody takes an annual option. So they don't worry about that. So they set up an annual payment and done with an annual payments.
The annual payment or monthly payment is good.
So yeah, apparently there is some small difference. So if you pay annual, you will get a small discount. Like how you are getting home insurance and car insurance, if you pay annual, like a small discount. So you will see some small. It's not really like a lot of money, probably like $3, $5 per month, not more than that. You will save when you pay annual. So apparently that's the way that people pay like a recurring payment. So every time your salary credits in on 5th of the month, make sure the recurring payment happens on the same day so you won't miss out or you don't need to remind yourself to pay for it.
Okay. Okay. Any other circumstances where there are chances that that claim can get rejected?
Not that I'm aware of. So once if the policy is issued and activated, they are going to give a promissory note saying that we will pay the death benefit to the beneficiary so long as the policy is in force and active. So that statement along with the CEO signature on particular date is going to be the claim document. So if there is anything happens and the provider is like not really honoring the claim, your attorney will know how to get the claim done.
I want to know one situation where, for example, any car accident happens and there is, way above the alcohol, the limit provided by the DMV. Then in that case, what will happen to the claim? I mean, the claim.
So that is exactly the 2 years of self-induced death coming into the picture. So the self-induced death is that's only for the 2 years, by the way, right? So there are multiple parameters impacting that, right? So that's not really the case for like more alcohol drinking. So I don't know how DMV classified. That could be true for the auto insurance claim, but I honestly don't know how the life insurance claim is going to be there in first 2 years if it is more alcohol and end up in a accidental death, right? So every single death is covered, including the accidental death. But if the driver is potentially like an insured, apparently, so I'm not really aware of that situation, honestly. So I don't know whether that will even cover under the suicide class. I think the claim should go through for this process as well. So.